going over some trades that I took in November on pound dollar, especially the 27th of November and the 29th of November. So going into that week, the 25th of November week, I was bearish for the week because we've seen strong bearish momentum every single week for almost 2 months. I do understand that it was quite deep in discount and would come into quite a significant level, this bearish bullish inverse fair value gap below this sell side liquidity. Regardless, still I was bearish for the week. So Monday opens up with a bearish candle that came into this fair value gap and found some resistance and closed down. And then Tuesday we took out the low of Monday and then took out the highs of Monday before. Right, we took out the low first on Tuesday. Let's just have a look. Yep, we took out the low first and then we pushed up, took out the highs, and then we came back down. After seeing that, on Tuesday, I'm not really trading Wednesday, but still I was bearish going into the week, and I was waiting for price to come up and take out previous day's high. So essentially take out Tuesday's high into that bearish fair value gap on the daily time frame, and then look for some kind of a trade at a specific time. So yeah, I was watching this, and I was waiting for price to come up to previous day's high, which happens next day, Wednesday, for 3 o'clock. Let's see if we had any news. Yeah, up until 1:30 UK time, so around 8:30 we had news. 3 p.m. we had news, and I took a trade at 6 a.m. US time, so around 11 o'clock UK time, as price came up to this high, previous day's high. And I was watching this, took a trade at 6 a.m. right there as price came up and took out London's high. I believe I took a trade somewhere around here. I took a short just as we were taking out this high, mainly because I like the pattern that was forming at the previous day's high. Price came down multiple times right along the way. It formed this pattern. We've formed a fake market structure shift, which failed to hold and then continue higher. Again, another small accumulation before price pushed up. And then because news was coming out, I didn't want to be in this trade for too long, and as price started to move in my direction, I exited the trade. Just as price came into this swing low right there, I got out of that trade, mainly because I did not want to be in this trade because before the news was coming out. And yeah, I didn't really have a direction by this point during the day, mainly because of the fact that it was so deep in discount and held quite a strong level. I wasn't 100% sure that price was going to hold the bearish order flow, especially because, like I said, that weekly time frame inverse fair value gap we held last week once, and again this week we came and tapped it again previous day and found support, and also we formed this candle which took out the highs and lows of the previous day's candle, and that's not really a good sign. In a bearish order flow, it's a good sign, but in a level like this, in a counter trading opportunity, not the best sign. So I wasn't 100% sure, and then I took another trade later on after the news. And the next trade I took was just after the news. This 8:30 news that came out, which was the unemployment claims and prelim GDP. And after that, I saw this bearish candle, and I took a short there. But again, I wasn't confident in the trade, and I exited that trade immediately with I believe 0.37% loss, and this was around 0.3 something percent win. So essentially a break-even day that day was, and I wasn't really too confident in my trades because I was quite busy the entire month and I wasn't really trading as much. So my analysis were not exactly as I would have liked them to be, because especially I get that we are in a bearish order flow in a weekly time frame, but we did come into quite deep into discount and found support at quite a key level, especially after taking out multiple lows. Right, we would anticipate price to come and hold this low right here, which failed, then this low failed, and where's the next possible level that price can find support is that inverse fair value gap right there. That pushes up, and I'm okay with that. So Wednesday, I took a break-even day by taking too short in bearish order flow, but not exactly the best location to take the bearish order flow. Especially we had this pause just before, this pullback just before coming into that low. So more likely that we were going to see some kind of a pullback, And this Monday's and Tuesday's candle failing to continue lower, especially after rejecting that fair value gaps 50%. That was quite a good sign that maybe we're gonna find not gonna continue to hold that level. And then I took another trade on Friday, I believe that was a TGIF setup. So let's have a look at that. So yeah, Friday I was looking for a TGIF setup because we've had multiple bullish days in a row, and we've come into, and price comes into this buy side liquidity, which is something I'd been waiting for price to come into. And I took a trade at around, let's have a look. So yeah, I took a trade during London session at 1:55 a.m. So before we even had London session open, I took a short, which was, I was anticipating price to come up to this buy side liquidity, but we also had a bearish fair value gap on the 240 time frame right there, which is something I was watching. That was in my mind. Bearish inverse fair value gap, right? And price comes up to that high. I was watching this. I liked the way this bearish bullish engulfing candle printed that took out the highs and lows of previous candle. This small accumulation zone, followed by this manipulation to the downside and then to the upside. And I believe I took an entry at 1:55 just as this candle was printing just there, after we tapped into the 50% off that fair value gap on the 240. To me, this was quite a good trade. It came into a fair value gap on the 240, right above quite a nice sell side liquidity or buy side liquidity on the daily time frame. We came up with quite an aggressive run up on the 15-minute time frame, especially. And after price put in a market structure shift, a failed market structure shift on the 15-minute, after rejecting the high, that sell side liquidity initially, and then pushed up, essentially trapping all these sellers. And then to me, yeah, that was a pretty good entry. Just unfortunate that price decides to pump up one more time and then find some resistance again one more time. And this is all on the 5-minute time frame, right? We put in a candle that makes a 4104 okay high, and the close is on the same. This candle's high and the close is the same, and that's pretty good sign that we might start pulling back now. And then we just drop. There's no waiting around for anyone from that high, and then price drops. Potential entry somewhere around here during New York Open. I had placed my entry at a 618 retracement, but price had already moved too far away from the highs, and I didn't expect price to retrace back into that. So trade somewhere around here probably was a good idea, but I didn't get my entry because I put my entry at the 618 pullback. We also have this, right? If we were to trade a unicorn pattern, we had a high created, we had inverse fair value gap followed by breaker, and then price just drops down, pulls back into that inverse fair value gap once, and then drops before continuing higher. A good trade. I was just quite early into it. I waited for that fair value gap to be tapped. We also had this breaker right here, which is something I noticed afterwards, which is fine. Something that's for myself to consider in the future. We also came and tapped into this order block on the 60-minute time frame, and yeah, there's something to wait around for is either the order block, the break on the 240, right? That's a small confluence for price to come into, then where I took the entry. And then we had on the 1 hour time frame again displacement followed by a unicorn setup, and that would have been a good entry again, but I didn't re-enter that trade, so that was a 1% loss. And then price actually just continues higher afterwards, and then closes up on this high. What does it do next week? Okay, it continues lower, so it does, the 4 hour does play out. It ranges quite a bit the next week before continuing lower, before going up one more time. Yeah, I took another trade after this on Kiwi, again similar TGIF setup, so let's go over that. On Kiwi, similar, I was looking for TGIF setups because we've had some bullish runs throughout the week. We did come into quite a major equal low sell side liquidity, and found some kind of a double bottom and we rejected previous week's low, and then pushed up with quite a bullish candle. So Monday candle there, Tuesday, Wednesday, Thursday. And I was just waiting for price to come into this buy side liquidity. Again, on the daily time frame, that's quite a good level for price to come into and find some kind of a resistance, right? So yeah, I waited, and I believe we did have some kind of a channel forming at that level for me, right? We had, I know it's not the perfect channel, but we have RSI diverging from A to B, and I took a trade on a Friday. So on this, as price came into that buy side liquidity, I saw similar to pound dollar, right? Had this pause accumulation, had a candle that took out the low and highs of the previous candle. Price came up, put in this pin bar. We tapped into this order block on the 1 hour time frame, which is something that I was watching, which is something what gave me more confidence to enter this trade. We came up to that high during London session, put in this bearish engulfing candle, and then price failed to continue higher up, and then I entered the trade at 250, somewhere right there. Price displaced lower, left a fair value gap, and left a fair value gap right there, and I believe I entered right there, and I exited that trade at the New York Open. Risked slightly more than 1%, so this was an overall 1 point. Actually no, I believe I took that trade and I did exit the trade at down there. Yep, so this is where I entered the trade. Stop loss were there, and I exited that trade as price came into this order block right there during London session, and that was my trade done around 1.4 hour. A TGIF setup similar to pound dollar. Another way to look at this trade could have been, right, if you're going to be TGIF on this on the 1 hour time frame, like I said, could have entered at this retracement. Again, this is why stops needs to be above, right, these candles, because if you just entered at that low and aimed for this fair value gaps and placed your stop right above that fair value gap, then there's no way, then there's definitely you're getting stopped out. But also we didn't get a market structure shift on this, unlike pound dollar, which is another reason I probably wouldn't have entered that on the 60-minute time frame. But yeah, price came up to that high, strong displacement straight away. Price didn't wait around, and then we pulled up, made a high, swing high. Price took liquidity off that high, right, this high right here, came into this fair value gap, inverse fair value gap, tapped it, and then dropped into this low. So that's another trade for a TGIF setup, but this was around 1.4%, so overall it was around 0.4% for the day, because I only took 2 trades. So it was a good TGIF setup. I quite prefer TGIF setups because of the fact that they're a lot more easier to identify, and if I need to find an alternative way to enter rather than just entering at the highs, because like I said, pound dollar I entered at the high, got stung. Kiwi I waited slightly more because I waited for a little bit more displacement. Price came up, we held this order block initially, right, we held that order block with this bullish candle, and then pushed down, left a fair value gap, right, small fair value gap there, and then I entered just at that as price was pulling into that fair value gap, and then it dropped. So, and then it came back up again, but I was quite confident that we were going to continue lower because it's TGIF. So yeah, I do need to find alternative ways to enter TGIF rather than just entering aggressively at the highs.